What up, guys? Happy New Year 2022 to everybody out there. Thanks for coming back. I've been out not doing videos, not being very involved in the stock market in the last couple of weeks, just taking a break overall. Sometimes you need that. The same way that you take a vacation at your regular job, you need a vacation from the stock market. If you follow this every single day, you're just going to go insane, okay? So I'm back full time. There's a lot of exciting stuff coming in 2022. I'll be at CES, Consumer Electronics Show, here on Wednesday, coming up in 3 days. So I'll be reporting from there. I'll be posting most of my stuff on Instagram. I'll probably be doing a couple YouTube videos, hopefully, but it takes a lot of work and it's a lot of stuff going on, especially this week. Okay, so let's get to it. Let's get to the important stuff that we're going to talk about today. Of course, don't forget to hit that like button, hit subscribe for all you guys that haven't done so already. I really appreciate your support. Hopefully you learned something from me. We have some fun in the meantime, all right? So let's go for the second half of 2021. We saw that we had the Orbi-Crony. You know what I mean by the Orbi-Crony curveball that was thrown at us investors this second half of 2021, coupled with the increased hawkishness of the Federal Reserve, all right, which is increased but not entirely unexpected. Okay, it also gave us pretty decent amount of tax loss selling by major Wall Street firms when they saw these names just fall off a cliff. It was a good opportunity for them to take some tax loss so they can spread that out over the next couple of years. Okay, I don't think that's the major driver of selling by a long shot, but I did think it had some added kind of incentive for people to sell pretty much here in the later part of 2021. Okay, that's stocks like your Teladocs, DraftKings, Robinhood, all these high growth names, all high multiple, high growth names. All right, now let's ask ourselves, would 2022 be any better? We'll break it down, okay? And we know several things for sure, starting with the Federal Reserve. Okay, we always watch the Federal Reserve as investors because as interest rates go higher, it means that some stocks, some earnings are valued less, okay? And we see that here in the CNBC article. We see here that it says stocks could ride into 2021, tailwind into the new year, but the jobs report and the Fed will be in focus. Here we see investors are also likely to shift their focus into the Fed's move to tighten policy, which could do a rate hike. They could hike rates as early as March of this new year. So when we look at March of this new year and what the Federal Reserve is doing is we have to realize, are they meeting the expectation? Are they going above the expectation? I think they will behave for the most part, maybe for the most part being slightly more hawkish than expected, okay, but not entirely unexpected. I don't see Jerome Powell hiking up rates way more than what the market expects, because that would send stocks into a tailspin. Okay, so I don't think we're going to see that all, but we will keep an eye on the Federal Reserve. So now the next thing to consider is going to be supply chain issues, guys, and we're tracking those, or I'm tracking those through the Port of LA Marine Traffic website. We see here that traffic has come down significantly since about November of last year. And it's a positive thing because we see how sort of these supply issues have peaked, in my opinion, okay? November, December, very rough, very high demand months for store shelves and stores and people demanding products being in stores. Now, of course, I see that inventories will rise in January and February of this year, but the question will remain, as inventory levels rise, will inflation come down, but also in your specific companies that you track, will the inventories rise and the rate of sales rise with it? That's going to be very important to track here in 2022 for your specific companies that you own. Now, next to consider here is markets are still near all-time highs. All right, so we see that the markets here on CNBC. We have the Dow at over 36,000, S&P at record territory, 4775. I think the closing high was on Friday or Thursday at 4,800. We have NASDAQ over 16, oil in the U.S. 10-year bond yield at 1.5, all right? So with the markets being at all-time highs, we have to understand why they're at all-time highs. These are mostly led by energy, real estate, and the tech names, the FANG tech names. This is why these markets are essentially at all-time highs. Other stocks, other sectors have been completely ignored in 2021. Okay, that is essentially your small cap value names. Those names have not done much of anything if gone down next year. Also, your Kathy Wood type names. We have two of these, which is your Teladoc and DraftKings. We own two of the Kathy Wood names, and we keep a close eye on them this year, right? And that's because my fourth point and my last point is valuation matters, all right? And that is the most important thing to take away from this video, is that I want you guys and ladies to mind your valuation. Know how to value a company. Know that a company that trades on its sales versus trading on its earnings is more dangerous, is more risky than a company that trades on real earnings. So we have to know which companies are profitable, which are not profitable, and actually have a discipline as to what you buy, all right? If you have a Kathy Wood type portfolio and you're not Kathy Wood, you're taking more risk than you really know, unless you have this extremely high time horizon like Kathy Wood does, all right? So that is definitely what I want you to consider. If you guys need any help when it comes to valuating a company in 2022, please reach out to me. I'd be happy to help with that, all right? Now, on the other hand, what I want you guys to consider when it comes to valuation is in 2022, we're also going to get an opportunity, or our companies are going to get an opportunity. Companies like Rocket, like Honest Company, like what else? Corsair. They're going to get an opportunity to prove to us that their stocks are extremely undervalued, which is what I'm counting on here on 2022. We need these companies to show us the earnings, turn these companies around from these troubles that they've been in because of supply chain and so on, and Orbi Crony, whatever it may be, and actually have these management teams prove to us that they are truly undervalued and making those stocks more enticing for more broad investor base. Okay, now that's going to be all for today, guys. I have a lot of stuff going on this week. I'm going to do a couple of takes on specific stocks like Honest Company, Corsairs, Rocket. I have some plans on that, but I also have CES coming up later this week, okay? If you guys want me to focus on anything in CES or send you a picture of something or maybe interview somebody from a specific company that's going to be at CES, feel free to let me know. Shoot me an Instagram DM on our Stock Glider Discord. Let me know. I'd be happy to try to find these companies for you and ask some questions on your behalf, okay? Again, Happy New Year. Let's get to work, guys, all right? And let's do good in 2022. Peace out.